Hello and welcome in, everyone. Happy Saturday to you. It is Colby, the DGI Crab, and today we're going to talk about dividend increases for the month of February. If you are new to the channel, this is a bit unique in that I only cover 60 of the highest of quality dividend growth stocks, and I've split them into 4 separate categories or tiers based off of the age of the investor, which I believe your age and time horizon are the most important metrics to consider when you are a dividend growth stock investor. We've got loads of passive income coming in without lifting a finger. Dividend increases are fantastic. You don't have to do anything but hold stock or ETFs and just let that money start piling up. Of those 60 stocks, 13 of them increased their dividends in the month of February. So let's jump right in and see which ones did just that. Remember, I'm not a licensed professional. You should always do your own due diligence before you invest in anything. So we're going to start with the Tier 1 increases. Tier 1 are low yield, high aggressive growth stocks, best suited for the 18 to 30-year-old investors. We had 3 dividend increases in this particular group. Sherwin-Williams goes from paying 71.5 cents per quarter to 79 cents per quarter, which represents a 10.5% dividend increase. Not too shabby. With this group, we want to get double-digit dividend increases cumulatively, and Sherwin-Williams is ensuring that we are going to get that at least out of them. Now, stock ticker ADI, Analog Devices, not a great dividend increase, but I'm not going to gripe and moan about it either. They go from paying 92 cents per quarter to 99 cents, which represents a 7.61% dividend increase. And then finally, Waste Management, which also happens to be one of my top 10 favorite dividend growth stocks. They go from 75 cents to 82.5 cents per quarter, even 10% dividend increase. Nice work there from Waste Management. Not too bad from this particular Tier 1 increase. If we'd have gotten a 10% increase out of ADI, we'd really be looking at a 3 for 3 here. But overall, Tier 1 investors should be pretty happy with this collection of increases. Tier 2, the age 31 to 41-year-old investors, where we're looking for starting yield anywhere from like 2% to maybe 3.5% on the high end. We want to see high single-digit year-over-year dividend increases out of this group, so like 7 to 9% cumulatively. Now, we got 2 dividend increases in here, and Next Era Energy, stock ticker NEE, definitely hit that mark for us. They go from paying 51.5 cents per share per quarter to 56.65 cents per share per quarter. An even 10% dividend increase. Great work there, Next Era Energy. That is a stock that I have added a little bit to here and there over the last few months. They kind of go into my buy zone of yielding 30% or more above their 4-year average here and there. They haven't consistently stayed there, but this is a utility I'm always happy to add when they hit my personal buy zone metric. Now, we got a bummer here from Home Depot, unfortunately. They go from paying $2.25 per quarter to $2.30 per quarter, which is just a 2.22% dividend increase. Maybe Home Depot will surprise us later on in the year and do another dividend increase to get them up closer to that mark that we want to hit of high single-digit dividend increases. But Home Depot hasn't exactly been an undervalued stock over the last year, so I was certainly expecting a better increase from them than this. Their competitor, Lowe's, has also been a bit disappointing recently with their dividend increases as well. I'm hoping that we get another increase out of Home Depot before the end of the year, but I'm not going to sit here and count on it necessarily. This might just be a slow dividend increase for them. An increase is still better than a cut, better than staying flat or nothing at all, but definitely want to do better than 2.22% in the Tier 2 group. All right, everybody. Tier 3 increases. Tier 3 is the 42 to 53-year-old investor, where we're looking for starting yield in the 3 to 4.5% range. And we'd like to see dividend increases as a group between 5 and 7%. So not quite as aggressively growing as the year twos or the tier 2s, but slightly higher starting yield. We've kind of got a mixed bag here. So we'll start with Chevron. They go from $1.63 per quarter to $1.71 per quarter. 4.91% dividend increase, very much in line with what Chevron typically does year over year. Very satisfied with this one out of Chevron. Archer Daniels Midland. Now, this is a stock that I've been adding a lot of over the past 6 months or so. They've been very undervalued for a while now. It's been a tough stretch for Archer Daniels Midland, and they come through with kind of an expectedly disappointing dividend increase, going from 50 cents to 51 cents per quarter, which is just a 2% increase. Pretty easy mental math there on that one. But ADM did a really large, I believe 11% dividend increase this time last year, which was a lot more than I was expecting. So if we average those two together, then we are still certainly hitting a better than 5% average increase over the longer period of time. But because their stock has just been so low and so down for a while now, I wasn't expecting a great dividend increase out of them. I'll take this 2%er. I think they'll eventually recover and get out of this mess that they're in right now and get back to doing dividend increases more in line with what they than this one. But also at that point in time, they probably won't be an undervalued stock either. So you got to pick your poison there, but I always take an increase. And T. Rowe Price, man, this one has just been so disappointing. This is one of the worst performing positions in my personal portfolio. I built up a not a massive T. Rowe Price position, but a larger one that I'd like to have when it was still a stock that was trading above $150 a share. I hadn't really locked in on my personal strategy at that point. I've held on to this one for quite a few years now. Still continued to reinvest those dividends, but man, T. Rowe Price had this excellent track record of doing, 8 to 12% dividend increases. In these last few years, it has been tough sledding. They go from $1.24 to $1.27 per quarter, just a 2.42% dividend increase. Again, I'll take an increase over a cut any day of the week. But at some point in time, man, it would be nice to see T. Rowe Price do larger dividend increases than what they've been able to do for these past few years. The stock continues to trade low. It's not in my personal buy zone because their 4-year average yield continues to climb up as it sits there comfortably above 4%. And I guess that's the silver lining. If you do happen to be somebody that's adding T. Rowe Price right now, you are getting a yield comfortably above 4% starting out. But if that's paired with just 2.5% dividend increases, you take the, say, 4.5% starting yield, add 2.5% dividend growth. What do you get there? It's about 7%. Not great. Not a great dividend growth combo factor. I'd like that to be a little bit higher for certain. Genuine Parts Company, GPC, the dividend king, goes from $1 to $1.03 per quarter, a 3% dividend increase, a little on the lower side for GPC. But their stock has dropped quite a bit as well. A few months ago, they dropped like 20%. They're down to like sub $120 a share. They're kind of working on a recovery story right now, but the dividend increase is a little bit conservative. Maybe in a normal year, this would have been more like a 5 or a 6% increase out of GPC, but 3%, well, I'm not excited about it. Similar to Archer Daniels Midland, they're trading down right now. They're trading low. So you don't become a dividend king by getting way out over your skis and doing larger dividend increases than you have any business of doing. Sometimes companies play it conservatively, and this is probably a good year for GPC to be just a little bit conservative with that increase so they can keep their streak alive. And then Coca-Cola, another one of my top 10 favorite dividend stocks. It is a very boring stock, truth be told, but it very gradually increases in share price over the long haul. Very gradually does dividend increases. Another dividend king. They go from 48.5 cents to 51 cents per quarter. A 5.15% dividend increase, which is pretty solid for Coca-Cola. They don't even always do as high as 5% when they do their increases. So I'll happily take the 5% out of Coca-Cola. Um, Still not an undervalued stock, even with the 5% dividend increase, but always happy to see that steady Eddie player Coca-Cola rewarding their shareholders with gradually, consistently increasing dividends year over year. And then finally, our tier 4 dividend increases. We've got 3 here. Now, this is for the 54 and older investors that need higher starting yield immediately, not quite as concerned with high dividend growth. They just want something that's nice and stable, that increases the dividends enough to at least keep up with a normal year of inflation. So we're talking about starting yield in the 5% plus range, and hopefully at least 2 to 4% dividend growth. And we're getting that out of this group. This group is coming through really nicely. So Prudential Financial, they go from $1.30 to $1.35 per quarter, representing a 3.85% dividend increase. Prudential Financial, personally, when I'm looking to add them, they're going to be yielding in the high 5% to low 6%, which they're not doing right now. But if you're getting them at that point, pairing that with a 3.85% dividend increase, that's a nice dividend growth compound factor, if you ask me. Now, and then we got a couple of REITs here. Essex Property Trust, they go from $2.45 to $2.57 per quarter, 4.9% dividend increase. It has been a tough 18 to 24 months in the real estate sector. A lot of those stocks have been trading on sale for a while, but Essex Properties has not been one of them. This stock has been so remarkably consistent. They are a dividend aristocrat with 25 plus years of annual dividend increases working for them. And this, we'll just call it a 5% increase, is right in line with what they typically are able to do. Nice work there, Essex Properties. And then everyone's favorite monthly dividend paying stock, Realty Income. Realty Income typically increases their dividend every 3 months or so. And usually those are very, very small dividend increases. A lot of the times, not even 1%. But cumulatively, over the course of a full year, you could typically expect a 2 to 4% annual dividend increase overall out of Realty Income. This one was actually one of the better dividend increases. They go from 26.4 cents per month to 26.8 cents per month, which is about a 1.5% dividend increase. If Realty Income did a 1.5% dividend increase every 3 months, we'd really be talking about some passive income coming in, because Realty Income, I'm usually looking for that to yield at least 6% before I get interested in adding any of that. And, if you were also getting 6% year over year dividend growth, great combo factor out of a monthly payer. Now, the next Realty Income increase is probably going to be more like 0.5%, if that. Some of their increases are better than others. And like I said, when you add them all together over the course of a year, you're usually looking at 2 to 4% annual dividend growth year over year. Another dividend aristocrat, the monthly dividend paying company. Excellent stock to rely on in your retirement years, because they just are so consistent. You could just count on that monthly income coming in to help you pay those bills each and every month. I would much rather own in retirement a big old pile of Realty Income shares than own rental property. I don't want that headache of having to manage a property, fix things, or deal with a property management company, worry about tenants that can't pay. Realty Income can pay each and every month. And that is going to be one of the pillars of my retirement plan when the time comes. So those are our 13 dividend increases for the month of February, everybody. Let me know which ones of these that you own. Are you excited or disappointed about any of them? Let me know in the comments down below. I hope you will like and subscribe Tell your friends about the video. I'd like to grow this channel quite a bit in 2025, and hopefully you all can help me do just that. Till next time, everyone, my name is Colby the DGI Crab, and let's keep that passive income a-rolling in.